am Leslie Glazier with That Properties. Welcome to Windy City Wednesdays. And today I am with Patty Dalkos with Guaranteed Rate, a wonderful lender. Super excited to talk to you about what is going on in the market.
Thanks for having me today, Leslie. I appreciate the time. Looking forward to chatting with you about recent updates on guidelines for mortgages, where we are today, and to help people understand that we are working, we're closing loans. We want people to not put this off. If they're ready to make a move, we are here to help.
Fantastic. I'd love to hear that. So tell me a little bit about what's going on this week or today.
So as you're aware, things are changing rapidly in the mortgage world. We have a lot of people that have been furloughed, that have been unemployed. So it is causing a little bit of guideline changes with our Fannie Mae and Freddie Mac guidelines and jumbo guidelines. So mortgages work in two different worlds and have some separations within those worlds. So if you are looking for a property under $510,400, you fall into the category basically of Fannie Mae and Freddie Mac. And I'm not going to lie, those guidelines are still really streamlined. We're not seeing a dramatic change in those guidelines as of yet.
Seeing kind of a 30 to 45 day, or are you more 45 to 60?
I would prefer 45 to 60 just because appraisals are now being considered for either drive-by or desktop, and appraisers need a little more time to satisfy those conditions. We are still getting some appraisal waivers if there's a certain criteria that is met, so that's still positive. We still need to ensure that the borrowers are employed prior to closing. Title companies are also taking a little bit longer to issue the title commitments. So we do ask to, instead of the 30-day closings, before we were closing loans in 2 weeks, but obviously in this day and age, it's just not possible. Minimum 30, 45 days, absolutely. FHA guidelines, the VA guidelines, honestly, interest rates are still really low in that world. I'm shocked as to how low the rates are. So we're still offering 5% down programs on Fannie Mae and Freddie Mac. VA loans are still at 100%. FHA is still 3.5% down. There have been some restrictions with down payment assistance programs. So we're seeing some changes, not too many in that regard, but a few. Again, technology, DocuSign, we're still offering all of that. So we're still streamlining all of that. We're rushing things through as fast as we can, and we're working as a much more cohesive team with the agents, with the title companies, with the attorneys, because the goal here is to get everybody to the closing table quickly.
And I would think that in your lending world, you're already pretty virtual. So this is such an enormous change on that front, not the market itself, but.
Correct. We were already doing everything remotely. Basically, clients were DocuSigning their applications, uploading their documents into safe portals. So all of this was already being executed prior to this change that we're dealing with right now. In conjunction with that, Guaranteed Rate specifically was doing flash closes a year ago. And what is a flash close? It's a kind of a fast track way to do a closing. So the day of a purchase closing, the client will DocuSign most of the non-essential closing documents the morning of the closing before they leave their home. And what they'll sign at the actual closing table are the actual documents, the wet sign documents, the mortgage, the note, the truth in lending, whatever other documents need to be actually wet signed. They'll sign those in front of their attorney, and that limits the time that they're at the title company. So very fast closing times are happening. And if the clients don't want to sit in the title company office, they can go sit in their cars while we fund the loan. So 90% of the documents are signed before they actually get to the title company.
And what about jumbo loans?
So there has been a liquidity crisis on Wall Street regarding jumbo financing. So it's affecting every jumbo lender across the United States. People have heard about this all across the news. This is nothing new. We are seeing some pullback from jumbo investors. We have seen some jumbo lenders pull out. The feds are working actively to shore up this crisis on Wall Street. They're pouring billions and billions of dollars into the markets. They're trying to ease these fears. And at some point, once this crisis does subside, we truly feel that all this will come back. But in the meantime, they're just hedging their bets right now and just kind of holding back. So what does that mean for the average jumbo consumer? Yeah. As far as a purchase goes, most jumbo lenders will no longer go over 80% loan to value. In other words, 20% down, which was pretty much always the gold standard, but we did have some jumbo investors that did allow to go up to 85%. So in other words, 15% down. We have just a few that will do that now, as opposed to a lot more than we had a few months ago. Mm-hmm. Credit scores, super important. 700 minimum credit score. We had some jumbo investors that went below 700. That's no longer allowed. So again, maintain your credit scores. Reserves are extremely important now. They have to be liquid, as opposed to a month ago where you could show 401k statements for proof of reserves. Now they need liquid reserves. In other words, non-retirement funds, especially if you're self-employed. We're going to scrutinize your down payment funds, where they're coming from, and we're only going to use a percentage of those assets. So this is all changing as we speak, and it will affect the ability to buy the higher priced properties, because if you're putting 20% down and you need to have some liquidity for 12 months of reserves for a total housing payment, that might affect your ability to be able to close on a loan. So what can we do? It's super important that you reach out to your agent, to your mortgage professional, and assess your current balances, assess your current asset statements, and get everything in order now. The IRS has extended the filing date to July 15th. If you're self-employed, this is ever so important. If it was me and you know that you're looking to buy a new home, get your tax documents to your CPA. Self-employed borrowers, 2 years of self-employed income are required. You know you need to do this. Get your paperwork organized. So every lender is going to require this. This isn't something that just us has this as a stipulation. Profit and loss statements, balance sheets, 2 years of self-employed, file tax returns, not only for you, but for your business if you're more than 25% owner. So get all your ducks in a row. We're going to need to see asset statements, not just at the beginning of the process, but prior to closing. We need to verify that your portfolios haven't decreased in value enough to where you can't satisfy the current guidelines. So as a responsible lender, we just are here to inform your clients of what they need, and we keep informing them throughout the process. Yes, we need this now. We will need this in the middle. We will need this at the end, 5 days prior to closing. We're going to verify your employment at the start, and we're going to also make sure that you are employed prior to closing.
That's great advice. I was just telling a client, I know you're excited about moving, but you're not buying a sofa right now.
Please don't do anything. Don't buy a sofa. Don't buy any televisions. Don't buy a car. Don't buy a fork. Don't buy any dishes. Don't do anything that would affect your credit scores by nothing. There's nothing that you need to do until you actually close on your property. So it's really important. We stress that, and thank you for sharing that information with your clients, because the more they hear about it, the more they understand it. So thank you for sharing that as well.
I mean, this is an interesting time where I am now, getting a proof of funds for down payment.
I think it's important, though, that the conversations continue, because the world has not stopped. We might feel that way sometimes, but we are still closing loans. I'm talking to clients every single day. I'm pre-approving clients.
It's
Again,
busy,
it is.
especially with my vacant properties, but it
Yes,
is.
it
People
is.
are buying, and it's mostly been people that are renting that,
Yes.
need to move out,
Yes,
relocating.
correct.
Some kind of been put on hold, but others are here.
They are here, their leases are expiring, they need to make a move, and we are here to help. And it's really important to start the conversation early and not to wait, because they might not think that something is a big deal, but it might be a big deal during the loan process. So it's always better to start the conversation early and be prepared. We're all about preparing all parties, understanding, letting them know what the process is all about today, because they might be relying on information from a few years ago, and things have certainly changed since then. So we're all about updating our clients and where we are today with information.
First-time buyer, what would you recommend? Just kind of you're going to purchase in the next 6 months to a year. What would you recommend?
So again, I would always start with a baseline credit report. If you've never had a credit report pulled up from a lender, I would start to do that. You might need to pay off a certain amount of debt. You're not going to, an average consumer isn't going to know what are the proper steps to take in order to qualify for a loan. So even if they're a year away, it's always good to have a number in the back of your head.
Absolutely.
Things are going
There's so many unknowns.
Yes.
I mean, I found that when my client's credit is pulled, there are a lot of issues that they didn't even know were there.
Correct.
How long does it take? Do you help with credit repair? Do you have someone that can help with that?
Yes, I have plenty of experience in credit repair. I can look at a credit report. I can tell a client, there's a collection. This is what you need to do. If there's a very, very serious credit situation, we would refer them out. But if it's something simple, as far as paying off a couple of balances for credit qualifying purposes, or getting them to the point where, how do we raise your credit scores within a 6-month time frame? That is absolutely something that I can help with. Again, 20 years of experience, and we can certainly help. And there's no charge for that. Again, it's a conversation to start with the client, want them to know that we're here to help them. Again, it could be a year away, doesn't matter. We're not here about today. We're here about helping the client and getting them to where they need to be.
And you are with your clients long-term, you're
yes.
not just there for the purchase or the sale. I mean,
No, I help clients buy their first home. They have a child or they expand their family, then help them move to their next home. I help parents downsize, generations. This is, again, been in the business a long time, and you establish a nice clientele, and they refer you business and they keep coming back. And that makes you feel really good. You're constantly in their lives.
That's what keeps me going every day.
It does. It does.
Well, thanks so much, Patty, for being here. I so appreciate your time.
It's my pleasure. And again, I just want to share with everybody, it's challenging times that we're in. We all want everyone to stay safe, and we'll get through this together, and just be positive, and hope that we all understand that there are challenging times, and this will be a new normal for us, but we will survive. We'll get through this, and we are working. We're here to help. And even if you need somebody to talk to and just get through the day, we're here for that as well.
That's fantastic. I agree. And I think that we've seen a lot of wonderful humanity come out of this. I mean, I'm seeing a nice bond.
It's something special. So we're here to help in any way we can.
Excellent. Thanks so much, Patty.
Thank you. Have a wonderful day.